when Pulsechain launches, the price is going to stabilize by, the way price stabilizes is when it goes up in value. And so once it goes up in value and it's sort of like stable, then people, that could happen instantly. That could happen over the next week or 2 weeks or 3 weeks. My theory was that it's going to stay low for a good portion of the time so that validators can accumulate Pulsechain at a low price. And I think, isn't it the desire that we have more validators than less validators? I was just thinking, if the price stays low for a while, then big old fat whales can't really dump for the value that they wish they could get. And the other side of that is, if the price stays low for a while, then guys can get accumulate lots of Pulsechain, and there's going to be a lot of validators to make the network thick with validators. So does that sound logical to anybody?
Yeah, I like that theory. Sounds very logical. I mean, it makes sense. Like, we got 4,000 validators right now, and I am potentially, with just looking at SAC balances, we could easily do what, 20,000 plus validators with just what we know people should have at the beginning, if people who SAC want to become validators. But that's a good point. What about people who SAC less, who want to get in, who can't become a validator right now and need to accumulate? Yeah, it's a really good theory.
Yeah, depending on what Pulse launches at, that might not be too expensive at first. So
absolutely,
that's probably going to be another factor that increases the demand for Pulsechain.
Not doing the math off the top of my head, but if 32 million Pulse were around $330, that would be under the SAC value by quite a bit, which is very possible.
That would be way under the SAC value.
Yeah.
You mean $3,200 was the SAC value?
Yeah.
It should be $3,200. Yeah.
Yeah, very possible.
I mean, what about like the fact that like if it's anything higher than SAC value, let's say double, let's say it's worth 2 times SAC value. I mean, don't you think that like whales would just and certain whales would not, but other people would just like dump. And if they dump, then the price will go down, which is opposite of what the conventional wisdom says it was going to go up.
Well, I think there's going to be a lot of buy pressure, because think about it. Think about how many people who missed out on the SAC phases. I see it all the time. How many people you hear in these spaces that are like, oh man, I missed out on Pulse, but I got into Pulsex, and vice versa, or people that just missed out on both of them. So there's going to be a lot of buy pressure too. But I really think if there's people dumping, there's going to be a lot of people buying.
We're going to open up at a 10x from the initial SAC of 0001. So we'll be at 001. We're going to pump up about 10x from there, 6 to 10x from there, and then we're going to start dumperoni down 80%, and that's when some pro players are going to come in and buy like crazy and pump it back up.
It's going to be all the people, which is the majority of the sacrificers, that sacrificed under $1,000, which was most people. That's going to get bought up probably in 2 to 3 months.
Yeah, there's a lot of people who borrowed money or put money they should never have sacked. That's another thing you hear all the time. That kills me when I hear that, man. It's like, never bet on money you don't have, But yeah, those people are gonna dump. They are.
Hex's Away says we're gonna open at 0.001, which is a 10x above SAC price, and then we're gonna pump from there 6 to 10%, or 6 to 10x. 6 to 10x.
Massive demand in the initial buy. I'm talking about once we can push value in the system, right? So when you get a Pulse ramp running and we can push in money, I'm thinking we go up from there.
Got it.
But just remember, some people SAG at all different rates, which means their rate is not your rate, which means they're not going to sell most likely until they hit their rate, which when I'm saying 10x, that could be their flat rate break even rate. So are they really going to sell? It's probably not. For a lot of us, 10x is not what we're looking for.
Hopefully most people didn't wait 2 years just to break even. That would be pretty sad.
So I know I want 9 or 10 times as much Pulse as I have. So that means I'm going to have to bring in new money. That's just all there is to it.
All right. So the way I look at it is there's 15,000 people who sacrifice that could potentially dump.
Yep.
And there's 63.
Most have tiny wallets. Right? Like a lot of them have tiny wallets.
Most have tiny wallets. And then there's 63,000 people in Telegram who all want and need Pulsechain. And Hex did a 10,000x with how many stakers? Like roughly 60,000. So
I just wanted to add, like a lot of time has passed, 2 years or whatever. And like Yeah, if we would have launched like months after when we thought it was going to launch, there probably would have been a bunch of dumps. But I think enough time has passed, so much time, in fact, that like a lot of people have already adjusted to it, maybe even forgot about it. Yeah, you had to, right? So like even if you overextended yourself and you're like fucking, even if you're hurting now, you've adjusted already. And like you would be stupid to fucking, you waited this long, right? Like why would you fucking dump right away? It'd be the dumbest fucking move ever. That's my opinion. I don't think people will.
Dumbest move of your life, bro.
There's some dumb people out
Absolutely.
here, though.
So it's one of those things where people in the mid range, you might be like, man, I'm holding this thing for years because I want to see the massive gains. For some of those bigger wallets, they'll part with some. Their sack rate's below like day one, right? So for them, they could technically just get like a 2 to 5x, and they'll probably be sitting pretty.
Exactly.
Hell is going on? What is up, guys?
The debate is raging about the ratios proposed for Pulse and Pulsex.
Yeah.
What the hell? I want to get your blood up. Let's hear your point
Well, number one, Richard's nuts. If that's exactly what he's trying to do, from what I'm hearing, he's nuts. He's wrong. Pulse sacrificers, just from the risk they took, should get a higher ratio. Now, let me caveat it with this: even if it starts at a 1-to-1, it ain't gonna be there for very long, because it's gonna swing way into those 1-to-3, 1-to-4, wherever people kind of thought it should be at. Right after that, obviously, that will happen. So this isn't to me, it's more of the precedent that's set. It's not so much, the valuation on the thing as much as it is precedent, right? But to me, Pulse sacrificers took the leap in the dark. They took the biggest risk. They waited the longest. They also, from day 6 of the sacrifice, watched the rate on a bonding curve go up during the sacrifice set. So you actually had people in the sacrifice for Pulse paying more and more and more and more in the Pulse sacrifice set. So how do you go 180 days later, round 2, and then end up with a 1-to-1 or even near that ratio? And that's even before the fact that you look at the reality that an L1 is never the same valuation as a DEX, right?
I got a devil's advocate position, okay? I don't agree with this, but let me answer your questions. Why not? It doesn't really matter what it comes out at as long as the market freaking develops it as a ratio before the bridge comes out. The bridge comes out, then we got a dollar value. But before that, we got a associated value between Pulse and Pulsex that the market, that our community will establish in the free market. And we all know what that's going to be because we've seen testnet go through it to a 3-to-1, 4-to-1. We know this. And and Pulse sacrificers that took that risk are not going to have lettuce hands knowing that what they got is freaking gold. Not gold like in the physical sense, gold is in the figurative sense. Diamonds.
Well, yeah. So like I said, the caveat was that it's more about precedent. I don't think that a Pulse X sacrificer should be able to swap instantly a 1-to-1 for Pulse just because they got in late. Okay, period. That's just a standard precedent. So I'm not running the ratio valuation personally off of the math that Richard's using.
But what if you're assuming Liquidity will take care of it and they get off scot-free? I'm thinking Liquidity is nothing, and they got to pry it from Pulse sacrificers' hands.
Yeah, well, I mean, I don't know anybody that is going to be doing that. I literally don't know anybody from the whale community in Pulse that is going to swap Pulse for Pulsex at a 1-to-1 or 1-to-2. We're in both sacrifice sets, so why the shit would we ever do that? So that's why we already can know that the ratio, even if it starts anywhere near, it has to highly swing in Pulse's favor, regardless of what the opening ratio is. And that's why I just keep going back to the point. To me, if I'm Richard, I have to set the ratio at a kind of a more reality, not just the math based, but just the consensus based, the risk that was taken, the time that was waited. KDP just put out a good tweet on, I think, the average ratio to L1 between ETH and BNB and Phantom, I think, is a 45-to-1. So to me, I don't agree on pretty much every single level.
No, you agree because the question is, what would you set it at? So you have an
I would set
opinion.
it at a 3-1.
Yeah, then that's your opinion. You don't have to agree with anything else.
Correct. But a 1-to-1? Fuck no.
Right. Look, I'm interested in there being an imbalance, like you said, from a psychological standpoint. I think that'll kick the market off in a very positive way. I think it'll bring some froth. It'll bring a lot of people trading back and forth, a lot of begging and pleading. It'll bring more value to Pulse, and then that'll slosh back like we all thought would happen back to Pulse X, and the two will ratchet each other up every time it sloshes back and forth. That's what I believe. I'd rather not see equilibrium at the beginning, just because we got to push the ball back and forth ourselves. And whether or not that'll happen in the first day, the first minute, I don't care. I want to start with like a little head start and decide one of them that is worth more than the other from a ratio standpoint.
Well, let me ask you this. Did when the bonding curve started on day 6 in Pulse, right? And then we watched people coming in, and they were coming in, and then people were sacrificing for Pulse even afterwards at these astronomical rates. But let's just put it at, day 17, 18, 19, and that last 3 days where you kind of had the kicker built in at the end, right? So do those individuals, is their pulse transposed into the same more or less value as a Pulse X sacrificer who came 180 days later?
Well, they have the opportunity to get more points. So I would say that they already baked that in to win. Now, if they went in with a penny at the very first day and $5 on day 42 like a Nimrod, then that's on them. But if they took full advantage and did the risk, did risk everything, then they should have more points naturally than a later sacker.
Yeah, I guess my point is the math just doesn't jive with me, and I don't really care.
I understand.
I really
It isn't
don't.
the math.
It
isn't
I'm
the
in
math.
both.
It's
I'm loaded up to the gills in both, but it just doesn't.
yeah.
It doesn't.
Same. But I think that the thing that you and I can't figure out is why the psychology is not being emphasized. And the problem with that is the free market will determine whether or not the risk is correct or the balance is correct. And we will see exactly what you're saying play out either way. Doesn't matter what it
I'm
comes
all
down
for
to.
the free market, Bob. I'm all for it. I'm good. Like, I'm good. But whatever happens, happens. I'm totally fine. I already have a thought in my mind as to how to play it with this, but I do think that it'll skew heavily in Pulse's favor. It doesn't matter what the ratios ultimately start out at. It really doesn't, because right after it opens up, the free market will tell us what those ratios really are. Like, you'll have a couple people on either end of the spectrum get lucky, probably with some bigger bags, but the market will tell us what it really needs to be.
Yep.
And that's what we want. We want free market valuations anyway. So my only, you asked me to come up and just tell you what I thought. For me, if I'm Richard, I just don't value it just based off of a mathematical equation. That's what I'm saying.
Yep. I totally get it. Well, Richard has never just simply done things from a mathematical perspective. It's psychology plus math. Always. Remember, he prides himself at being a chief marketer, right? A top grade marketer. So you've got to address the psychology.
In post plan, though, in the TG, that's not how it's being derived.
No. I think it's an act. How many times in the past, Mando, did we have debates in the Pulse Plan chat and all the cockamamie schemes and things that we knew we could support? How many of those did Richard take a right turn on? I would say half, at least.
Yeah.
He's whipping us up into a frenzy. He's getting the dust and cobwebs knocked off our brains. And we are beginning to start to speculate again and dream. And that is healthy.
It's marketing. If you want just a community consensus, you want to pull the number out of your ass, that's what it is.
Well, that's the testnet reconciliation. It's numbers there. You look at it over time. You see it in the graphs. You take a look at the ratio now. It's 3-1, 4-1. That's it.
Do you know how long? Do you know how long a 1-1 or 1-2 is going to exist once that thing goes live? About 30 seconds,
yep.
5 seconds. It really doesn't matter, is what I'm saying.
Unless the liquidity is deep and one whale says, "Gimme, gimme, gimme."
Well, I think that the liquidity has to be looked at differently when it comes to Pulse X, because it's not harvested liquidity, right? So it's minted liquidity. They're going to put it in there based on what they're going to do. It's going to look differently than the harvested liquidity, which I think will be maybe 1 to 2% of the harvested liquidity injected into Pulsex. How deep is that liquidity going to go for Richard's digital assets? I would imagine that they would be what we look at with Hex, or a little bit more for a blockchain. This isn't an ERC20. Well, it is, but it's a DEX. So you want to obviously do a market analysis and comparables on, BNB and ETH, and just kind of like what does the liquidity look like initially? What does it need to look like to be impressive? To not have whales pushing shit against themselves. You want to be attractive to people coming in and going out. So I would just imagine that the Pulse and Pulsex will have some good liquidity. And I would imagine Hex would be pretty much mimicking exactly what it does on ETH. You got to wonder how liquidity Richard is going to put into Pulsex with his actual assets initially. I mean, there's only so much that you don't want to create some run on the bank, in one direction or the other. So it's going to be very interesting.
I'd kind of hope he keeps the bridges light so they don't become giant money bag targets. Like keep the bridges balanced. That'd be nice.
Yeah, that would be nice. Makes sense. He doesn't care if you took a risk early. He doesn't care if there was a bonding curve. He doesn't care about any of that shit. It's pure math. You would think that you would factor those things in, right? Factor in an L1 versus a DAC. Factor in what those ratios look like on other chains. Factor in the bonding curve. Factor in the time. It doesn't look like he's from that vantage point. What he's doing, in my opinion, is just collecting information, because that's what Richard does. He's just a game theorist. He's like a freaking video game theorist. He wants our reaction to all of this information. If you're Richard, how much liquidity do you put in there? I mean, it doesn't make sense to have this small little pond. That just creates way too much volatility. You'd kind of want a nice. It's kind of like heck. Just enough. It's just enough monitored all the time.
I wouldn't say there's anything intrinsically bad about volatility. It's blockchain.
Yeah, didn't say there's anything bad with volatility. Just
it's the level of volatility and wreckness
and slippage. Yeah, and people will just not. You were talking the other day when we were in the chat about taking care of people and people not really knowing this industry well enough. And it's true. And in this situation, it's especially true. So if you go live with pools that have very little liquidity and the slippage is high and shit's just moving massively against you, it's an easy way to wreck people in your community. So
it shows you on the UI the slippage you're looking at eating. I mean, like, it's a trade. Do you want to do it? I mean, will there be someone that has zero self-control and they click buttons anyways? Well, probably, I guess.
There will be people that don't even look at it. They don't even know what they are doing.
Adding a whole bunch of liquidity pools on stuff that literally has no monetary value, so people don't eat slippage. I mean, I don't know. I don't see it.
Well, I do think that they do have value. Ratios equal value. And it is a new blockchain with hundreds of thousands of people ready for it to go live. It's not like, we're launching proof of memes and you've got, 1,000 people ready to go. You have to, in my opinion, put in enough liquidity determined by the demand you think is coming in. I mean, you don't want your blockchain to go live and it just be a joke.
Let's say there's not enough liquidity going one direction into Pulsex and everyone's just buying the shit out of it. Is there something incumbent in some whale to come and like fulfill that need for people to buy into it? No. Like the price, the ratio, there is no price. The price is zero, intentionally so. The people will settle on the ratio and they can swing it as wildly as they want. People add and remove liquidity, they'll get fees. I mean, is it incumbent in a whale to control the ratios? I just don't see it. In a weird way, it's almost like you're saying there needs to be a whale that provides counter pressure to any of the buy pressure on market.
I didn't say anything like that.
Why? Well, but that's what stops volatility is a counterparty. And if there's no counterparty, then there's volatility.
Stop volatility. I'm not saying stop volatility. I'm saying a bigger ocean helps prevent volatility. You will still have it, but if you have a bigger pond versus a little minnow fish pond, it helps people with the slippage and with less volatility. And with the amount of money that's gone into the sacrifice sets for this blockchain, launching it with very little amount of liquidity, to me, it's just, I wouldn't do that.
So if he doesn't get this right and there's not much liquidity, he will be the laughing stock of the crypto world.
1000%.
Maybe you're right.
Well, see, I don't mind volatility. Like I don't mind hex volatility, right? But when I go to buy and sell hex, I'm not eating massive amounts of slippage, you know?
Yeah, I think you compartmentalize those, because if you don't pull down the little swap bar underneath the ratios to see the price impact, which a lot of people may not pull that down, they might see 100 to 1, but then they might put in a massive amount and not realize that that's got 30% slippage. So they're not actually getting 100 to 1.
Correct.
So then they get wrecked because they didn't pull down the little menu, or the DEX doesn't have a built-in warning that comes up like in CowFi that says, warning, this is going to be X amount of price impact. Like it doesn't auto pull down that menu. You have to pull it down yourself, and then it's in red writing, price impact is this. And so people might see one ratio and then go balls deep and get wrecked.
Yeah, we see it all the time when individuals will sell into the chart with heck when they could have done it with a limit order, or they could have waited, for the liquidity to be looking different, in the dexes, and could have just saved way more money, So, because like you said, a lot of them don't click that drop down, man. And then they see what actually landed in their wallet, and they wait 3 days and they're shitting their pants because he just lost 30% of their stack, man.